I'd like to share my top tips for people relocating to the UK. Top tip number 1, opening a bank account. I'd suggest, first of all, speaking to your bank in your home country. Many banks across the world will have links with organisations in the UK, and this way you could get a bank account set up before you've even arrived. If you're already in the UK, try going into different banks on the high street. They'll all have different criteria, but one thing they will have in common is they will all require proof of address, such as a utility bill or tenancy agreement, and proof of ID, so passport and any visas that you hold. Top tip number 2, an emergency fund. I would always recommend holding an amount of money in cash as an emergency fund. Typically, I would say a minimum of 3 months spending money, so what you need to live, pay your rent, pay your bills, food, that sort of thing. This will provide a buffer to avoid the need to get into debt. Top tip number 3, building up a credit rating. Financial institutions in the UK obtain information about their customers in the form of a credit rating. If you want to take out a mortgage, loan, or even a mobile phone contract, you will need to build up a credit rating. There are various ways you can build your credit rating. For Commonwealth citizens, you can join the electoral roll, and there are other ways, such as having direct debits paid regularly from your bank account and taking out a credit card. But with credit cards, a word of warning. It's important to repay the balance in full each month to avoid getting into debt. If you cannot repay the balance in full each month, you risk incurring costly interest payments. Top tip number 4, buying a property and getting a mortgage. If you decide to stay in the UK for the longer term, you're probably going to want to get on the property ladder. When taking out a mortgage, a bank will look at your credit file and whether you've made repayments to things like credit cards and mobile phones on time. The other thing that you need to think about is having a secure income stream. So whether you're employed or self-employed or running your own company, you'll need to have proof of earnings, and banks will typically lend up to 4 times your annual earnings for what you can borrow. The other thing to consider is the value of the property. Again, banks will only normally lend up to maybe 80 or 90% of the cost of the property. And for my final top tip, joining your employer pension scheme. All employers in the UK are legally obliged to provide a pension scheme for their employees, and this is a great way to save towards retirement. Contributions will be deducted from your wage, and your employer is putting in money too, so the pot should build up quite quickly. Even if you don't plan on staying in the UK forever, the great thing with the pension is it's your personal pension. So when you change jobs or return to a different country, that pension stays with you to save towards your retirement. For advice on mortgages, investments and pensions, I recommend finding an independent financial advisor.